Hello everybody, welcome to a new long overdue RRG video. I'm recording this on Thursday the 9th of October while the US market is open. Because it's been so long, I want to take a top-down approach, start at the asset class level, look at the RRG for asset classes, and then zoom in on the US sectors. We start with the RRG that shows the rotation for the various asset classes. Then this is the one, it's the weekly one, it's predefined on the RRG page called asset allocation. And as a quick reminder, what I use there in this universe, in this group, is Bitcoin as a proxy for cryptocurrencies. SPY, that's obviously stocks. Then we have DJP and GSG, which are two ETFs that track the commodity markets. We've got GOVT, which is the aggregate for the US Treasury bond market, so that encompasses all the maturities on the yield curve. We've got high yield, which is the high yield corporate bond market. And then we've got LQD, which is the investment grade corporate bond markets. And we have the US dollar as the cash component. The benchmark that we're using is the Vanguard Balanced Index Fund. That's a 60-40 balanced index, which is used by a lot of RIEs and asset managers as a gauge to measure their performance. If we look at the RRG here, then we see an interesting picture, I guess, because we have zero in the leading quadrant. We have SPY just crossing over from leading into weakening, and we've got Bitcoin traveling rapidly through the weakening quadrant. Both are still on the right-hand side of the graph, so that's above 100. Those are still in relative uptrends, but they are losing some momentum. Now we've got this whole cluster here in red. That's both commodity indexes, and that's the fixed income. So GOVT, high yield, and LQD are all inside the lagging quadrant, picking up a little bit of momentum. And then the US dollar is picking up. It's moving from the lagging quadrant into improving, just about, and it's representing the recent improvement of the US dollar index. However, it is still at a very low level, so we've got to see how this progresses and how strong that move is. Now, when we move this chart to a daily chart and look at it again, then you see quite a different picture. So what we see here is, first of all, the strength of Bitcoin. So it's actually underscoring the strength of Bitcoin. It's inside the weakening quadrant on the weekly, but on the right-hand side. And here you see the recent strength. This is the last 5 days of price information for Bitcoin, and you see how strong that move is relative to VBINX. A similar picture goes for DJP, which is actually pushing into the leading quadrant, and SPY remains static inside leading just above the 100 level on the Ars Momentum scale, but at a very short tail. And that's a good example here. You see how long these tails are, for example, DJP and Bitcoin. And SPY also shows 5 periods, but it's much smaller, and it's pretty much so are some of these. And that is a good explanation on how you can use the tail length on an RRG to gauge the power behind a move. And then we have inside lagging, we've got GSG, which is juggling a little bit, going back and forth. You see LQD, which had a little hiccup and now started to move left again. We've got GOVT, which is rolling over, and we've got HYG. Let me zoom in and you can see it better. Rolling back into the lagging quadrant, coming from improving and now rotating back into the lagging quadrant. And the US dollar move seems to, this is only today, so this is actually a live, this node is live. You can see that it's losing a little bit of momentum, but not much yet. The difference between DJP and GSG is that GSG has a higher allocation to oil, to energy, to the energy complex, and DJP is broader based. So that's why sometimes there can be quite a big difference between the rotations of DJP and GSG. The conclusion of this RRG, in my opinion, is that, and let's focus on the stock bond rotation, is that SPY stocks are still the preferred asset class. Both on the daily and the weekly RRGs, SPY is on the right-hand side of the graph. It's over 100 on the RS ratio scale. It is inside the leading or the weakening quadrant, while the opponents, so the fixed income ETFs, the fixed income asset classes, GOVD, LQD, and HYG are on the left-hand side, and that very clearly shows the preference for stocks at the moment. Another more direct way of looking at that relationship is by looking at the ratio between SPY and IEF. And you can see here how this ratio, after a little hesitation until September, broke above its previous high and is continuing its rise. And if this chart moves higher, it means that stocks are outperforming bonds. I've plotted the RSI and the MACD below it just to get a handle on potential divergences or trend analysis. And you can see here that the RSI is just about 70. It's not even overbought yet. Plenty of room to move higher. And the same goes for the MACD, where you can see that the MACD line is still above the trigger line, and that means that the trend is up. So there's no divergence either in either of these indicators, as we have seen it in prior situations back in 2024 and at the end of 2024 when we saw those dips in this relationship. So for the time being, stocks are still the preferred asset class over bonds. Let's have a quick look on Bitcoin. Everybody's talking about it. And here's the weekly, so the longer term chart of Bitcoin. It's a log chart because it's a massive move. And you can see that we are peaking above its previous highs. The rhythm of higher highs and higher lows is still clearly intact with some interferences, but the bigger picture is still pretty much all higher lows followed by higher highs. If we move that to the daily version of Bitcoin, then we can see that we had an attempt to break higher above that. Let's put it at 125,000 US dollars. We tried it and now we drop back into that range. And that means that there is a potential for a drop back, and I'm going to put the support level at 118 because that's what the previous resistance was, and usually those previous resistance levels come back as support in the future. And that means that we still have 4,000 US dollars left in risk. It's about 2.5-3% for Bitcoin at this price level. Here also you see that there is no divergence because this rally, it peaked, let me put my cursor on it. You can see that it peaked here and then now it's going lower. So RSI is just following price. And the same goes for the MACD. So no divergences, no signal for a major peak in the making. If we manage to clear that 125, 126 area convincingly, then obviously the upside for Bitcoin opens up again. Let's move to sectors. Here is the weekly RRG for US sectors. And over the last 3 weeks since we last spoke, I guess, the major trends I'm going to say are still present. If you look at these tails that are 5 weeks old, you can see that the last 3 weeks are pretty much all in the same direction with a few exceptions. Let's start inside the leading quadrant. We have communication services and consumer discretionary inside the leading quadrant. Consumer discretionary rolled over almost immediately after entering the leading quadrant, so that's not a fantastic sign. And you can see how communication services this week, because the last node here, that is a fluid, that's a live node that's not fixed yet. This last node here will only be fixed tomorrow, Friday, at the close of the market. And then next week we will start a new node. So for now, communication services is rolling over. And also you can see how technology inside the weakening quadrant is kind of hooking back up again. I need to zoom in really hard, but you can see how this week is actually very positive for technology. So we've got discretionary, communication services, and technology on the right-hand side of the graph. That's a very limited amount of sectors, but they are heavyweights. So a lot of market capitalization is on the right-hand side, especially with technology, and that is what's driving the S&P 500 up. What does that give us on the left-hand side? Well, everything else, but let's start with improving. So healthcare and energy clearly improving. Look at that nice long tail in healthcare, so that's strong. However, both of them, energy and healthcare, are still at relatively low readings of the RS ratio, and that means that they are both still at risk for a rotation, lagging, improving, back to lagging. It's a little too early to make that call yet on this week, based on this weekly RRG. We go into the lagging quadrant. That's pretty busy. So we've got staples, which is continuing its way lower on the RS ratio scale. That is a very clear underperformer. Little pickup of momentum, but it wasn't very material yet. And then we've got real estate, which is also far on the left, picking up a bit of relative momentum, but as you can see, it's also still moving lower on the RS ratio scale, so that is not fantastic either. We have industrials clearly moving into the lagging quadrant now and looks to be continuing. And then we have, let me zoom in, so materials picking up a little bit. Basically, so materials went through this decline and then it started to pick up. Utilities and financials already been picking up, but all still are moving to the left on the RS ratio scale. So if you pick up relative momentum, but you're not able to pick up relative trend, relative strength, then it's still not a fantastic picture. Overall, on all these sector tails, there's actually technology, which is with its high reading on the RS ratio scale, driving the market, followed by communication services, and to a lesser degree by consumer discretionary. Healthcare and energy seem to be going through a strong patch, and so is utilities, but they're all still on the left-hand side, which makes it difficult and a hard call to make at the moment. Let's go to a daily RRG here and see how that impacts the rotations. So here you see the current strength of healthcare and utilities. Remember, they were on the left-hand side on the weekly. They're picking up, and you can see why that is. That's this strength on the daily RRG. The question is how strong these tails are and whether they can continue to pull to the right, pick up relative strength, and move their weekly counterparts all the way back to leading. I'm not sure whether that's going to work at this point in time. What we do see here is technology inside the leading quadrant, like a lone ranger. This is the only sector that is confirming its strength on both the daily and the weekly RRGs. So this is without a doubt the strongest sector at the moment. We have insight improving staples, materials, industrials, and real estate. So industrials is going counter trend because on the weekly it's going into the lagging quadrant. Here you see it moving insight improving, but moving towards leading. To add them together, they're probably somewhere in the middle. The weekly weighs heavier, and that makes industrials still one of the weaker sectors, I think. If you look at financials, that's still inside the lagging quadrant, confirming what we see on the weekly. The same goes for energy, which picking up here, but here you already see that rotation lower. Consumer discretionary, which was inside the leading quadrant on the weekly. Here you can see why it rotated immediately lower on that weekly because of that daily weakness. This tail is now confirming the weakness on the weekly, and if this manages to continue lower on the RS ratio scale, that might put the XLY chart, the XLY tail, in danger on the weekly chart. So that is one that I really want to keep an eye on because it's such an important sector. Pretty much the same goes for communication services. You can see how it's moving from into lagging, so it's absolutely underscoring the relative weakness on this daily time scale, while it is still inside the leading quadrant on the weekly chart. And this needs to turn back up quite rapidly and quite fast to actually keep XLC inside that leading quadrant on the weekly chart. And then we have staples and materials. Staples was inside lagging on the weekly and moving further left, and it looks as if we have this rotation going on, which will very soon drop back into lagging and continue to confirm that weakness on the weekly RRG. And the XLB tail was inside lagging and picking up a little bit. That's what you see here. But here also it's the second weakest sector on this daily RRG, still at low readings, which makes it very vulnerable for a rotation and lagging, improving, back to lagging. Let's go over the individual charts and see what they say, because there have been a few price moves that are very interesting, but they are not or not quite backed up by moves in their relative strength lines. And that's why an RRG gives you that big picture that shows you all these rotations in one image, which allows you to separate the relatively strong from the relatively weak when you look at the individual price charts, which, because of the price move, sometimes can be misleading.
If you're watching me talk about RRG on the Stockcharts TV channel and you cannot replicate it, that is because you are not a member yet. If you like what you see and you would like to have the same functionality as what I'm using in my videos, at least take a free trial, check out the functionalities of RRG, and after that, we'd love to see you as a subscriber to our service.
Let's start with materials. That sector is inside lagging, picking up a little bit of momentum. That's what you see right here. But when you look at the relative strength line, the RS line, you see that downtrend is very much intact. And the price of XLB is caught in what could develop as an ascending triangle, but the upside right now is really limited. We go to communication services, then obviously this huge rally has led to a breakout, and that put XLC inside the leading quadrant. But you can see how the recent decline, and this week is also a pretty weak week for communication services, is now causing the RS line to roll over, go back into its range. The RRG lines are, well, it's hardly visible here, but they are responding, but not very strong yet. So for the time being, XLC remains inside the leading quadrant, but there is a very good opportunity, a very good chance that we will see some more downside risk for this sector. And I'm going to put the support level somewhere. So this is 109 now, so let's say 110, and this is 112. This is the previous high here and previous high that we broke. So between 110 and 112 seems to be good support for communication services. If we can hit that without more damage to the RS line, XLC remains one of the stronger sectors. Here is energy. If you look at the tail, it's just pushed into the improving quadrant, but still far to the left. And you can see why that is. Here is the relative strength line, and that is still very much in a downtrending channel. The reason why that momentum has started to move up and relative trend moved kind of sideways is because from mid-May, almost nothing happened in relative strength anymore. So this is a sort of an improvement, a recovery. Well, a recovery without recovering. It's just because it's moving sideways and not further down. But it remains inside the falling trend channel, and the RRG lines are picking that up. That keeps the energy sector on the left-hand side of the chart. And also, if you look at the price chart, the upside is limited to, I'm going to say like 95. That's the level of the previous two. Well, this 93. So let's put it at 95. Previous highs, almost the same as the upper boundary of the trend channel. So not too big of an improvement, and relative strength continues to move lower. Here is financials. I have been doing on the price chart okay-ish, but look at relative strength. This is a very clear relative downtrend. It tried a few times over the last few weeks, but now this week we see another confirmed lower low on the RS line, and that is being picked up by the RRG lines. The RS ratio line continues to move lower, and the RS momentum line is already starting to lose strength, and it's very likely going to put a new peak below 100. And what that means is that you will see a rotation without moving to the right hand side of the graph. So you will see financials, if this continues a little bit more, they might go into to the improving quadrant, but otherwise you will see a rotation even inside the lagging quadrant. It's pretty bad actually. So financials continue to be an underperforming sector. And then we have industrials. Remember, was moving into the lagging quadrant on the weekly chart. You see that beautifully here. So both are below 100, pushing further into it. That's pushing further into the lagging quadrant. We still have a very unclear situation of the RS line, where these converging trend lines here, the former resistance line, the former support line, but it's starting to look weaker and weaker based on relative strength. And the breakout here from this little flag or triangle pattern, it's still there, but it doesn't get the follow through it needs. And if you look here, then you see that this week, actually, we're now so far trending towards the lower end of the bar. We'll have to see how that works out tomorrow. But this sector is not, the price move is not continuing as it should, and that is affecting the weakness in the relative strength line. We go to technology. This is the sector of the day, the week, the month, the year, you tell me. After bottoming somewhere in April, this is almost a straight move up with little hesitation here in August, but we're continuing higher. Even this week, we're pushing to new highs. That is immediately causing the RS line to break higher. That happened 2 weeks ago. And you can see how the RRG lines have started to pick up again. So that loss of relative momentum because of the little dip here is now seems to be coming to an end. And that's, because the green line is below 100 means that XLK on the RRG is rotating through the weakening quadrant, but it's already starting to move up. So here you have a very good example of a leading, weakening, back to leading rotation. Is there a risk of a pullback? Absolutely. I mean, this is a massive rally. We're around 290 now. The only reasonable support level that I can peg is around or just below 270. So that's quite a decent decline. But if you look at the bigger picture in this chart, it wouldn't hurt the uptrend. That explains how strong this trend in the technology sector is and how much it is driving the market at the moment. So technology, top of the list, without a doubt. Here is the other end of the spectrum. Here's consumer staples, inside lagging, moving further to the left. A few tries to break higher, didn't work, and now we are, since mid-August, moving down and we're nearing an important support level around 77. If that breaks, we will see more downside in terms of price. And look at the relative strength line. We tried it, we did not manage to get higher, and now 2-3 weeks ago, we broke below the previous low in relative strength, confirming the relative downtrend. And that's exactly what you see happening here with the RRG lines. Very soon, that green line will start to roll over again, and you will have had a rotation of the staples sector, even a rotation inside the lagging quadrant. That's actually quite negative. And mind you, this is a defensive sector. This is maybe the only one, because it used to be staples, healthcare, utilities being the defensive sectors. But with everything that's going on in terms of healthcare getting more technology related stocks in there, and utilities getting more energy, AI, power consumption type stocks in there, they seem to be disconnected from the traditional defensive area of the market. Consumer staples definitely still is a defensive sector, and you see that here. So we just saw technology pushing to new highs, both in price and relative. And here you see consumer staples pushing to new lows, at least in terms of relative, but also the price chart is not fantastic. This is how far these two are apart on the market. And with technology moving higher and staples moving lower, that still calls for a market, a stock market that is related to growth stocks, to more offensive areas of the market. Here is real estate. Again, look at this relative strength line, still in a very clear downtrend. The leveling off of that downtrend, the loss of rate of change, the loss of momentum has caused that green RRG line to move a little higher, but it's still dragging that RRG line lower, RS ratio line lower, despite the fact that in the price chart, it's a very shallow trend channel. There's not much upside, not much is going on. Compare this chart with the one for technology that we just saw, or communication services. They are very different. And then here we have utilities. As I said, traditionally very defensive sector, but look at this. Very strong breakout to new highs. But in the relative terms, it didn't pick up yet, not as much. Maybe this break will help the utility sector to move higher. I mean, the trend is definitely there. You definitely have higher highs, higher lows now. But in terms of relative strength, we're still kind of stuck in this trading range. We might move up to the upper boundary. That's where it's beginning to be. That's where it will begin to become very interesting to see what's happening. And the RRG lines are just picking up here. We've bottomed out, or we seem to be bottoming out in the RS ratio scale. Momentum continues to improve, but we have a lot of work to do before this one actually crosses into the leading quadrant. And here is the healthcare sector. Another, you see utilities, huge breakout. Here you see healthcare with a huge breakout, although it's not to new highs. But also here, look at that RS line. That is still under pressure. We're still below this breakout level, so I'm going to watch this. This is 0.22, 0.25. Not that it really matters, but I'm looking at the actual level of the previous low and this pullback right here. The RRG lines are responding, but we would like to see a new series of higher highs and higher lows inside the RS line, because that will dictate, that will show whether there is a real turnaround of the relative trend. And based on this chart, I don't see it yet. This is a nice reversal. We broke the downtrend, we moved higher. This is a big move. But if you look at the pattern, this could be labeled as like a double bottom pattern, which means that 127, 137, 138. So that's about $10, $10, $11 above the breakout level, which is, let's put it at 138. That's pretty much this area here where your target is. So from current levels, there's only $4 or $5 left, which is about 3%, probably 3.5%. Not enough to keep up with technology, and that's why that RS line continues to move lower for the time being. And then the last one that we have is consumer discretionary. And that's interesting because last few weeks it was camping above that breakout level. We had that breakout, it seemed to be holding, and now this week it looks as if we're falling back because we're trending towards the lower end of the range. That's hurting the RS line, and that immediately has its effect on the RRG lines. That's why that XLY tail on the weekly RRG has come into the leading quadrant and immediately started to roll over. That's what you see right here. That's that rollover situation on the RRG. When this, well, I don't think this will come back this week actually. So it looks as if this break is failing, and that will disappoint a lot of people. So this sector could actually come under pressure. And then where we need to look for support, I'm going to say all the previous lows and previous highs in this move will at some stage act as support for the decline, but we have to wait and see where it stops and how it behaves. If we are going to put in nice higher low and then continue higher, then that may save this uptrend, but it isn't as strong as I would like to have seen it. Let me wrap this up in terms of sector rotation. What we saw is that technology, communication services, consumer discretionary are on the right-hand side. I think that technology and communication services are still doing okay. This chart of consumer discretionary is a little bit worrisome. That could pull the market a little lower. With a lot of stuff still on the left-hand side, with especially the consumer staple sector on the left-hand side and the growth-orientated, the offensive stuff on the right-hand side, I believe that we're still in a market that's dominated by growth stocks. But we may be ready for some sort of a setback. And that's not a surprise. If you look at the chart of the S&P 500, there's plenty of room for a decline without it hurting the uptrend. And that's primarily driven by the technology sector. So all in all, unless we will get new signals, new situations, new setups in coming weeks, I think that a setback in technology, and that will immediately lead to a setback in the S&P 500, is very well possible, but for the time being, it is not going to hurt the current very strong uptrend in both price and relative for technology communication services. Those are leading the markets. It might be called as not such great breadth, because it's only a handful of sectors and a handful of stocks that are doing it. But for the time being, that's where it's happening. In another video, probably next week, we will have a look at some individual stocks in those sectors, because that's where probably a lot more is to gain than just at a sector level. For now, thanks for watching. Sorry I have slacked so much. There are a million reasons why that happened. Probably none of them are good, but it's life. Again, thanks for watching, and I hope to see you again soon at a new video on RRG here on Stockcharts Television.